Hello and welcome to MasterChartsTrading.com market recap for the weekend in Friday, May 8th, 2015. This week, stocks surged on the heels of an upbeat jobs report, and it was a pretty strong move in pretty much all of the sectors. Buy signals was generated on many major ETFs and many of the momentum groups as well. And we'll look at TAN, the solar ETF, and the buy signal may finally be appearing there for a low risk entry. Bonds rebounded weekly from various oversold levels in the United States and in Germany as well. Gold and gold miners went in our short signal again. And finally, we'll finish off with energy ETF XLE, as it may have put in an outside reversal, and oil may finally be ready to roll over. All right, let's look at stocks. So S&P 500 large cap index. First of all, this is a bullish chart. You can see that prices are moving from the lower left to the upper right, and 50-day moving average, which is in red, is above this green line, which is a 200-day moving average. So since this is a bullish chart, I will give bulls the benefit of the doubt, and I will look for buying opportunities, not selling opportunities. And so here you can see that actually on Thursday, I would say the support did hold right there, because there was no close below this low or even this low. So the support is about here, and looks like we pierced through it but came right back. And then we rebounded pretty strongly, especially today. Look, there is a gap, the stocks gapped up and then continued higher throughout the day and closed at the top of the range. So no denying there is strong buying pressure going on still. As far as the market breadth is concerned, I've highlighted this in the past as well. You can see that there is this advanced decline line and the unbalanced volume, which are making kind of lower highs, while the security itself, the S&P 500, is making higher highs. So this is a divergence, and divergences are notoriously difficult to, sometimes they don't work out, basically. So I don't know what to make of it, because right now S&P 500 is probably the only sector which has this major divergence in the unbalanced volume and the advanced decline line. The other two major ETFs, the QQQ and IWM, do not have those divergences. As far as market breadth is concerned, we're still in the buy signal. We're still positive, and looks like we rebounded into positive territory. And as far as new highs, new lows, basically we're still staying positive. In other words, there is not as much buying pressure as, let's say, here in May, in back here, but there's still not enough selling pressure to make a bearish case, so to speak. Okay, and then this is a market timing chart that we use here at MasterChartsTrading.com. Looks like a sell signal was right there on May 6th, but then immediately today, just 2 days later, went on a buy signal again. So bullish bias again, and we went ahead and re-entered the market, and I'll show you later through which funds. So IWM, Russell 2000 Small Caps Index. It was, it had a pretty stellar run here from February till late April, but then it kind of sold off pretty hard. And looks like we held support here again, and then rebounded today. Now, Relatively speaking, I think IWM is better positioned, for higher gains potentially. If the market rebounds, then we could easily see new highs, but there is more room to run. So we went ahead and re-entered the market for IWM, and I'll show you on the next chart the market timing which we used to re-enter. Now, as far as market breadth, like I said, for S&P 500, you could see there was an obvious divergence in the advanced decline line, but here you can see there is not a divergence. You can see that we're making higher highs, and the advanced decline line is also making higher highs. And the same for unbalanced volume. You can see that we're making higher highs in unbalanced volume as well. So there's no divergence in small caps as far as underlying strength. And then here you can see that we sold off pretty hard, and the momentum of the breadth itself has weakened, but we're rebounding, and we're likely to continue higher because all stocks correlate. All stock indices correlate to each other pretty strongly. So I'm guessing that IWM will eventually catch up and rebound and probably make new highs, I'm guessing, soon. Okay, so next chart shows the market timing that we used here at MasterCharts Trading, and you can see the sell signal was as far back as April 29th, and the buy signal just happened today on May 8th, right there. So we went ahead and opened a position in small caps for our accounts as well. All right, next we'll get into some momentum stocks and momentum funds. So IBB, biotech, iShares. It basically has been in a very strong and steady uptrend for a good 6 to 8 months, possibly more. Here you can see that we did close below the 50-day moving average, and here we actually closed below this low. But I think that since this is a ETF, exchange traded fund, it's composed of many different stocks. You have to kind of give it maybe a little bit of a zone versus exact level. So I'm guessing that's what happened, and buyers stepped in, and buyers stepped in even more today, and you can see we closed above the 50-day moving average right there. And you can see on balanced volume, no divergence here. We made a higher high, and there's a high here as well. And next chart shows the market timing. You can see buy signal being generated after a substantial sell-off. There was a now stocks, this particular security is oversold enough, and we went ahead and re-entered, entered the market here on May 7th. You can see it was a day earlier than the rest of the market because it's just a stronger fund than the general market. Next is XSD, the semiconductors ETF, and there is a more popular ETF called SMH, semiconductor ETF as well. But the thing is that, let me just show you the next chart. You can see that here the top 10 holdings represent only about 27% of the ETF composition. It's a much more balanced ETF. For SMH, I believe the top 10 holdings represent over 70% of the ETF. Here, it's a much more broad ETF, and I think it's a better representation of the semiconductors group than the SMH. So similar picture here. First of all, this is a very strong ETF. You can see the SCTR has been above 90 for a very long time here, and here in mid-April, we can see that there's a sufficient oversold condition being present right there, and you can measure it by MACD being in a negative territory and being oversold. And then we use our market timing charts, same thing, XSD, to time the actual entry of the trade. You can see that the sell signal for XSD was back on the 24th of April, and then finally today, or the April on May 7th, yesterday was a buy signal for XSD. And then, you know, we possibly we're going to make new highs as well. I mean, I don't see why not, unless something bad happens in the world or something like this. Okay, next is 10 solar ETF. It's a pretty popular ETF as well, but this is a very volatile security, and you can see it gaps constantly. And I think the reason for that is because something like more than half of the ETF is composed of foreign stocks, and especially Chinese stocks. So there is, you know, some gaps, and you know, those markets are pretty volatile. Nevertheless, here in March, I believe, this security was bearish here in December and parts of January and February, and then finally here in March it broke out and continuing this pretty strong run. You can see that SCTR was very low here, but then it kind of came up and, you know, stayed in the above 90. So now it's amongst a market leaders as well. And this correction right here represents about 10% from peak to trough here in May. And next chart I'll show that 10, the solar ETF, is oversold sufficiently for my taste to go ahead and almost, you know, there's almost a buy signal. I want to see this line cross above plus 50 here. It hasn't happened just yet, but at the very least, this ETF is oversold enough to re-enter for my taste. So sell signal was on May 5th. So I'm waiting for a buy signal to be generated. I'm hoping next week, and if you guys, you know, if you guys follow along on StockCharts.com, I have a at the end of this presentation, I'll show you where to find all of these charts. But we also have a Twitter and a Facebook account, so I usually put information there as well. All right, next is bonds, and I use TLT, 20+ year Treasury bond fund, kind of like a proxy for bond market as a whole. And bonds really sold off hard. First here from the top in January, a rebound that didn't reach the top, and then sold off again pretty hard in May, in April and May. You can see that it actually closed below the 200-day moving average right there. It seems to have rebounded and closed above it. So for now, I'm staying out of the bond market for several reasons. One, you know, if the Fed decides to go ahead and raise the interest rates, that would be bearish for bonds. And number two, you can see that SCTR has weakened pretty significantly. It was amongst the market leaders here, and then it really came down hard. So now it's about, you know, at 17, so it's pretty low as well. And you can see that on balance volume made a new low here. So there is definitely money moving out of the bonds. But nevertheless, the security is still long-term bullish. you can see that the 50-day moving average is above the 200-day moving average, and prices are still generally moving from the lower left to the upper right. So I think the rebound in bonds will take place. The question is, where will it take it? You know, there's now quite a bit of resistance here in the 125 area, and then there's gap down here. So there is now resistance from this gap as well. So there is quite a bit of overhead resistance, and you know, this rebound, it already probably has started, but where will it take it? We don't know. So next chart is a TLT, same thing, and so far you can see that sell-off, or the sell signal happened on April 22nd, but so far I don't see a buy signal just yet. So you know, when it will go on a buy signal, I may open a small position just to be in the market, because it's still a bullish market. So it's not necessarily, you know, it's not necessary to completely stay away from it. All right, gold and gold miners are next on the agenda. First of all, this is gold daily chart. Gold is in a long-term downtrend, and you can see it 50 days below the 200-day. Prices are moving from upper left to lower right. Long-term downtrend. Also, gold is in a short-term downtrend, and you can see this two parallel lines, which is a rough regression channel that I drew in here. So you can see it's pretty much, you know, kind of moving lower and lower. There was a strong sell-off here, which took gold below the 50-day moving average, and next, then it rebounded, and then it kind of closed below the 50-day again. So I'm guessing that here in beginning of May, the support from this low from mid-April held, because there was no close below this low. If there was a close below this low, I would consider this support to be completely broken, and I would expect, you know, prices to continue lower almost, you know, very soon. This didn't happen, and we still had a rebound here. So potentially there is now support here as well, but I'm guessing if this support is taken out, in the sense of if there is a close below 1174, I believe, I will, you know, the most likely will be a retest of at least this low and possibly the lows from November, which was in the 1130 area. Next chart shows GLD, Gold Trust ETF, which is still on our short signal back from April 30th. It's a very choppy kind of downtrend, and there was a lot of chopping around here. So far it's in a short signal, and we'll see if it pans out or not. Next chart is GDX, Gold Miners ETF. Similar picture here as well. Prices are, this is a bearish security. Prices are moving from upper left to lower right. The 50-day moving average is below the 200-day moving average. So the dominant feature of this chart, I think, is this, first of all, this steep sell-off into May, and then this rebound, which looks like a rising wedge formation. Now, rising wedges in a bear market are usually bearish patterns. So this breakdown that happened 3 days ago may be valid as long as it holds. See, it closed below this trend line, and then rebounded in the next 2 days. So far, you can see that there was no close below the 50-day moving average. So I'm guessing there is some support here in this area. However, if this support is taken out, we'll most likely see a fall to at least 1870, very likely $18 around here, because there's some support here. But this particular candlestick is not very bullish looking, so I'm guessing if this support is taken out, we may retest March lows or possibly even December, November lows. As far as market breadth, because GDX has actually market breadth data for it, so we have advanced decline line, advanced decline volume line, on balance volume, etc., and bullish percent indexes as well. So you can see that I highlighted this in the past. We were making higher lows here, but the underlying internals of the security were making actually lower lows, trending lower. So this does not bode well in my opinion, and if this breakdown holds, we can easily collapse all the way down to support here and possibly break it. Who knows? As far as bullish percent index, of course, it improved somewhat, but it's definitely in the 40s, which is a bearish territory. If it was like in the 60s, I would be more bullish on this security. You can see also that the new highs, new lows, there was no highs since February of this year. We had quite a bit of new lows, or pretty much neutral territory as well. And then market timing, again, short signal on May 6th. So right now, both gold and the gold miners are on a short signal. And then we're coming to the end of the presentation. Energy, XLE. Let me just undo this. So I wanted to highlight this pattern right here. So this candlestick, a small range candlestick, was completely engulfed by this next candlestick. And this is a bearish engulfing, and also it can be called an outside reversal, because you can see that this candlestick, I'm just representing it here, completely engulfs it. So this entire range is within this entire range. And then next day it was confirmed by a close lower right there. Since this bearish engulfing outside reversal pattern happened at the top of the range, this could be considered a bearish outside reversal. And we can, once we already have broken down here, sort of, so there's like a small rebound now, and since this is a bearish security overall, I don't, it's very possible we will continue lower and possibly retest March lows or even January lows as well. We are already on bearish breadth thrusts for for the internals of the security. You can see momentum of the breadth has rolled over. You can see it here and here, and you can see that the percent, new highs, new lows, there was very few new highs, not neutral, but before it was a bunch of new lows. So it's a bearish security as well. An advanced decline line, you can see that it was making lower high, while the security itself made a higher high for the move itself. So there's a lot of bearish divergences and bearish internals working here, and this pattern especially is just not very good looking pattern. And okay, as far as market timing, short signal happened on April 21st, and it still remains on a short signal, and there was no, it was not negated yet. And then finally, oil. So oil had a stellar run, really, from a low in mid-March here to a high in May here. It's like a 40% run, so it's pretty impressive. But it is it's in a bear market right now, so you can see that the red line is below the green line, the 50 days below the 200 days, so it's a bearish security, and as long as the security is generally bearish, I will continue to look for shorting opportunities. Now, this pattern here, we look like we gapped up, and then you know, we started higher and then kind of sold off during the day, and then the next day it was just a big selling, lots of selling that took place here on Thursday. Now Friday looks like we held support for now, so I'm not yet 100% convinced that it is indeed the top for this move. And in the next chart, I'll show that there was not a short signal just yet for USO, and almost rolled over. The MACD almost rolled over here. So on this chart here is a market timing chart, and so far it was just a straight shot up, and I don't see any. There was so far not a short signal just yet. It came very close yesterday, but today and yesterday, but it did not happen. So I'm guessing a little bit more downside, and then a short signal will be generated, and I will re-enter the market on the short side. See right here, there was a short signal February 10th, and that was very productive. This was about 14, maybe a little bit more, 14-15% short signal. All right, we're coming to the end of our presentation. Please go to MasterChartsTrading.com. We're very close to starting our trading service, trading alert service. So please do sign up for our mailing list, so you will be the first in line to get our special promotional prices. And then I wanted to show where to find our public charts information. So if you, most of these charts are located on our public charts page right here. And if you have any of the social media accounts like Twitter, Facebook, YouTube, and StockTwits account, please do follow us there as well. All right, that's it for this week's recap. Thanks for watching, and have another great trading week. Bye-bye.